choose Rashesh Shah, Chairman and CEO, Edelweiss Financial Services, joins us. Good morning, Rashesh, and thank you very much for your patience. We have been in and out of Infosys and have requested our guests to wait over. Thanks for waiting, but what's your general take on IT itself, since that is top of the mind at this point in time?
I think IT is going through this entire, reallocation that investors are going to evaluate this on a quarter-to-quarter basis, because there are a lot of positives. One of the main ones being it's reasonably priced, because IT has always been fairly aggressively valued, but in the last couple of years, if you look at the valuations, they are now fairly reasonable. But there is this whole uncertainty around US and around the visa issues and all that. So I think people are still very confused, and my feeling is it'll take another couple of quarters to see how the US economy pans out, how all these issues settle down, and the important part about rupee, because there was a hypothesis built that rupee will weaken, which it has not. So even that, is confusing investors. So I think couple of quarters of confusion, revaluation will go on, and only by the second half of this year, we think investors will have some clarity on the long-term trajectory for IT companies in India. But as I said, they are very attractively valued.
All right, Rashesh, pleasure to see you always. So that's an important point. Well, it's attractively valued, but want to ask you in terms of IT stocks, TCS, there's a new captain that's going to be taking over. How do you view that stock? The numbers didn't look bad. Maybe the street's a little iffy that the new captain has come off, and in fact, the old guard has stepped aside. When exactly does it become attractive? 22 times, 23 times, now it's at around 17 times, if I'm not mistaken.
I think TCS, if you look at this quarter, also continues to grow well. And I think a lot of the bad news for the last year has been priced in. The stock has been fairly, fairly flattish. I think this change in leadership will not harm the company, because historically we have seen TCS has had the leadership transition has happened very smoothly, from Kohli to Ramadurai to Chandra to now. So I think it's a very institutionalized company, very large, which a lot of processes underway, which will ensure that the injection of a new leadership will not create any stumbling blocks in the short term. And I think, as I said, from expectation point of view, a lot of the bad expectations are already priced in. So at least our view is that it should be a reasonable stock from an investment point of view for investors going forward.
Okay. Well, I just want to dwell a minute on what you spoke about, the rupee-dollar exchange rate, or rather the dollar-rupee exchange rate. It is at some kind of a historic high in terms of overvaluation. It is some 16% overvalued. And whenever it has been this overvalued, it has not brought good tidings for the rupee. If something goes wrong, then a crash is more likely. And therefore, well, at the moment our fundamentals are strong, but it's no good to be so way off the actual real number that you're looking at. People have argued, of course, about the real effective exchange rate as an index itself. But Rashesh, any thoughts on that? Does the overvaluation of the rupee something that has swum into your radar?
Yeah, you are absolutely right. I think it is an issue, because for last 3 years the rupee has been almost flattish, and we do have inflation of between 4% to 5% annually. So in a way, in spite of the inflation, the rupee has been flattish, which is what has resulted in the overvaluation. And this is harming both on the export side. So we have seen export growth has stagnated for the last few years. Along with that, even on the import side, a lot of the Indian manufacturers lose competitiveness, and we do believe that the fair exchange rate should be 72, 73 to at least maintain some level of competitiveness. And also, as you correctly said, last 3 years, because it's been flat, a lot of people who have exposure in foreign currency have not been hedging, because the hedging cost is a lot higher and the rupee has not gone anywhere. So a lot of people have stopped hedging, which is usually the worst point at which, when it breaks out, there is a scramble to hedge and all. A lot of Indian corporates are, I think, unhedged and overexposed to an adverse move on the rupee front, and that could, in the coming year, create some amount of uncertainty, volatility as we go forward. And I think from a fair valuation point of view, at least a 4-5% fall in the rupee is overdue.
Oh, absolutely, absolutely. That I think that should be etched in golden letters. this could be the red flag of the year for all you know, unless, of course, we are able to manage it with some kind of a gentle depreciation. Just wanted to come back to the Chandra appointment itself. How do you think a fund manager who has a lot of Tata Motors and Tata Steel in his portfolio likely to react to this event? Will there be a bit of a trepidation that you're getting a greenhorn and probably someone handpicked by Ratan Tata and maybe someone who will not take hard decisions? Or will it be that this is a good evolutionary step and a lot of good may come?
Actually, on the contrary, I think it is a good thing for the shareholders of Tata Motors, Tata Steel, because I think there was some uncertainty over the last 4-5 months, which has now got corrected because this, the infighting that was going on at the board level, all that has died down. Plus, also remember, Chandra is his own man. I mean, when he came, he took over TCS. He had big shoes to fill from Kohli to Ramadurai. And he has done fabulously well in the last 8-9 years when he has been at the helm. So he is his own man. He has very clear strategic ideas. And I think in a very quiet way, in his own way, he will implement what is right for Tata Motors, Tata Steel and for the shareholders of that. And I don't think it was ever an issue about what are the right things to do for the company. It was more about maybe interpersonal relationship and trust, which will not be an issue now because, Chandra has been part of the Tata Group, has a huge amount of respect from all the group companies out there, and obviously has a huge amount of comfort with Mr. Tata also. And I think that trust is very important, and that will be definitely there. And I think if there is a high level of trust between Tata Trust and Tata Sons chairman, that can only be good for the group.
All right. Rashesh, just a final word from you. Do we have a fairly firm bottom in place in the markets?
I think on the whole, we look at liquidity flows and all of that. I think the market looks fairly stable. And, the last couple of months, there was fear of the effect of demonetization, which have not panned out as badly, though I think it's still, the GDP numbers and all are still yet to come. But the feeling is that we have crawled back to normal, and by end of February or latest by end of March, the economy will be back to normal. In fact, there are some people, some investors starting to believe that having gone through such a big shock, there should be a relief rally and the economy will also come out stronger. That whole thing about if it won't break you, it will make you stronger kind of a thing. So if the economy has not been broken because of this stress, it will actually become stronger. And I think by March, we'll start seeing an uptake. And currently we are looking at liquidity flows are very strong. I think investor concerns also low. So we should be around there, around here. But as we have always said, markets in the range of 4 to 5% is always going to happen.
Well, Rashesh, before we let you go, the next big event is going to be the budget. Last year, remember, things were awful going into the budget. We were just moving lower. Now, this time we had a bit of a, pre-budget rally. We've gained close to around 500 points from the lows that we saw in December. What expectations you have from the budget? And also, earnings. When will earnings growth come for us? Every year we say next year, next year. Now, with demonetization, it's pushed further back.
Yeah, I think a couple of things. One is obviously this year's union budget is very, very important. Because it's, because after this there is only another 1 year remaining, before the next elections. So a lot of the new programs, the new real push government wants to give, this would be a good year to give. And obviously because of the recent demonetization, the government focus priorities will become very, very important. So I think all eyes are on that. I think it will have a big impact on investors and how they react to this. On earnings growth, I think we should be resigned to a very tepid overall earnings growth for the next few years also. But again, investors are no longer looking at overall market earnings. People are looking at sectors. And in the last few months, we have seen, steel and all have come back. We are seeing a lot of cyclical starting to come back. A lot of infra companies have been coming back. I think banks will, maybe another couple of quarters down the line, we'll start seeing banks, the provisioning drag going down and banks will start showing earnings. But overall, there will always be parts of the economy which will not do well because the global economy is not going anywhere. The private sector investment is not starting. So India is never going to fire in a full way because of low exports, this absence of private sector investment. So expecting 14, 15, 18% earnings growth in corporate earnings might happen on one quarter here and there because of base effect. But overall, I think we should look at industries and pockets of earnings, which even in the last 5 years, there are a lot of industries and sectors which have done fairly well. And I think the same trend will continue.
Okay, so not top down, bottom up. So look for the experts who can pick the right stock for you. Thank you very much, Rashesh Shah, for joining us with your thoughts.